Hey guys, welcome to another video by Fully Informed Trade, or Fire Trade for short. My name is Alex and I'm here to go ahead and review the stock, commodity, bond, and Forex market. So without any further delay, let's go ahead and review the markets. So let's go ahead and look at the dollar index, and as you can go ahead and see, we're playing this game of ping pong around the $79 level. As I was saying yesterday, there is a huge possibility of a candlestick jutting out like with one of those tails. And when you have a tail come out, don't be too surprised, because on a day's trading session, it looks something hideous like this. Right, it looks ugly, and it damages your portfolio badly. But you have to set up a stop in response to those type of movements, because chances are they're going to happen. And when they do happen, you have to set up a pretty generous stop on your order, especially because you're trading into a support level. When you trade support, always remember that your stop should be a little bit more generous to account for those fingers, or what I like to call tail ends, of a candlestick popping out right in the day's trading session. Let's go ahead and look at the next chart, which is going to be the SPY, Standard & Poor's Depository, which is pretty much an ETF, or what we like to call an exchange traded fund, which is just another name for a mutual fund, except it's actively traded on an exchange. This ETF closely tracks the S&P 500. For all of you guys who may not know, or who do know, might just be considered review, or just review of the core basics. Anyway, first of all, I feel that there's going to be some good resistance at around 130, so keep that in mind. 130 will be our key resistance area, and it can go up a bit. You know, you could have a candlestick popping up at the top, you could have a finger coming out, and not in the sense of somebody flipping you off, but honestly guys, like in the sense of a finger, as in you have this little wick just coming out the top of the candlestick body, and you could have the same exact thing happening. And what a wick kind of looks like is just this line that comes out off the top of a candlestick that looks like this. Now, here's your candlestick, you have this body, and you might not be necessary for me to draw this, but you have this wick coming out, and sometimes it can be really long, sometimes it can be really short because there's not enough momentum. But in a low volume environment where people they just take ages, they just sit there like snails, slowly going to their goal of buying whatever they want to buy. And pretty much in our case scenario, what I mean by moving at a snail pace is that we have very little volume. So what that basically tells me, based on how far this market has gone over a period of 6 months, I mean, because we've continued our uptrend from July onwards, and this market just seems to be that if I were to guess, I would guess that we'll have a longer stick, or a longer finger that comes out from the candlestick body. And because of that, we could push above 130 and even go up to 130.50 cents, which would push up the SPY by another 1 percentage point, which would be enough to touch the 1,300 level on the S&P 500 spot. So because of that, that's where I feel that the resistance is most likely going to be. You might have the finger come right out during the trading session just to see it pull back. And when you see these type of charts, it kind of looks like this. You know, I'll draw. This is the open. Okay, you'll have the market start out maybe around here and just go up, continue to go up, and then have somewhat of a pullback and close relatively. And you'll probably have like up and down, up and down, up and down. But then eventually it'll come to a close somewhere positive, but not that positive. So basically, it's going to start out good, and then it's not going to be so good, and it's not going to be as good as what it used to be, and that'll eventually be the top of the market. Let's go ahead and look at the next chart, which is going to be the Dow Jones Industrial Average. Dow Jones Industrial Average, same story here. It found some resistance against 11,000. Somewhere around, it started losing momentum or steam around 11,856. I pointed out there's a resistance level at around 11,867. So this market fell short about 10 points from our resistance level. But that's pretty much where I targeted. It was only 10 points away. And guess what, guys? 10 points on the Dow Jones Industrial Average is less than 0.10% off. So pretty much I called the resistance level on this market, I feel personally, fairly accurate. on my part. Because of that, market kind of had consolidated throughout the rest of the day and pulled back, and it went down to around 11,837. So considering all that, market wasn't doing too bad, but at the same time, you guys got to be a little cautious now, because I feel that personally this market could start finding some resistance and start pulling back in the coming days, maybe 2 or 3 days. But definitely something big is going to happen to this market, because what always comes after winter, as you guys always know, is summer, and what always comes after summer is winter. So, that gives you a basic idea. No, I know that, after summer it's autumn, then autumn it's December, which is going to be winter. But I just want to flip from black to white. Either it's up or down. In our case, it's either winter or summer. Right now, market rallies would be considered summer, and the cold, freezing winter that is really uncomfortable. Or most people hate winter, so just as much as people hate market corrections, and chances are after summer there's going to be winter, and with winter comes market corrections, at least in the stock market. So we're going to see something pretty major in these markets, and chances are it's going to be a pretty strong sell-off. Let's go ahead and look at the next chart, which is the Forex XAU USDO gold market. So pretty much is the gold market, and gold market has seemed to find some support on the 1,360 level like it usually does, but remember, you have this multi-year, 7-year hulking trend line. The Great Wall of China just comes out and extends right up and says, hey, you're not going to pass, you don't got to pass, you don't got a visa to go above this level. That's just an example. It's just me being a bit sarcastic, but it's kind of interesting that markets couldn't break above this major resistance level, and because of that, it kind of pulls back a bit. And if you want to see what a finger looks like, or a candlestick finger in a day's trading session like I was pointing out earlier, it looks exactly like this. It's a strong upwards momentum towards the beginning, and however it accomplishes its pullback is totally unknown, or could be known, but it's pretty much this. You have this, and you have this, and then you have this. But basically, the market goes up, it goes down slightly, and then it goes back up a bit, and then it stops just short of breaking a certain resistance level, but also at the same time it has retraced a bit as well. So overall idea of a candlestick finger is just this first part here. That's all you guys got to remember in a trading session when you look at a candlestick that's coming out like that. Oh wait, no, not that, but that. Like when it looks like that, okay? Let's go ahead and look at the next chart, which is going to be the silver market. Silver market, same exact story here. I don't feel too confident in the silver market. It looks like just another relief rally, just the same as gold. If you go ahead and look back, put the charts at max, let's put it to the test on this trend line, and let's see if this too had somewhat of some trouble breaking it. It hasn't even got close. It hasn't even touched the 20-day moving average. And pretty much I'm going to go ahead and throw in the 50 and the 100-day. And pretty much, we found some support on the 50-day. But we have found some resistance at the 50-day. And it's not breaking it as of right now. So that's a big challenge for the silver traders in today's trading session. Silver has just pulled back a bit right now. As I've mentioned, it looks like a relief rally to me. I could be wrong, but honestly, I would not take the risk. I don't feel that it's the time to go buy into silver, alright? And I like Tim Cramer, he's a nice guy, but this is not a buy moment. This is a buy, as in BYE moment. So, like I'm saying, bye-bye, I'm not going to trade you silver, I'm not going to buy you, I'm going to either short you, or I'm just going to put you on the back burner and wait for a pretty good support level that I can buy you from at a pretty good discount. I mentioned that silver would most likely retouch the support level at around 119. It's continuing down a bit as the stock market completes its peaking pattern, which it will in the next coming days, next 2 weeks. Within this week or next week is when you're going to see the peak in the stock market. In response, when the peak finally bursts, you're going to see the bond market finally reverse direction and go to the upside. But for right now, chances are if you see this market go right around anywhere near this level, there's a good chance that bonds are pretty attractive. and there's a great opportunity for a trade in the bond market. Crude oil, here's the story on crude oil. Crude oil, good for the long term. As far as going up to the moon in the scope of a single year, not that likely. Considering the whole environment, the financial environment, how financial companies are under pressure from Congress and everything, I don't think they're going to risk it. I don't think they're going to try to manipulate oil prices as much as they have done in the past. Oil prices have gone up, and you could contribute most of that to oil traders in the oil pits, and mainly major Wall Street firms like J.P. Morgan Chase, Morgan Stanley, Goldman Sachs, companies like that. So in the end, the companies that really did benefit from the oil price going up quite a bit was pretty much the oil companies and slightly the financial companies. And you saw a lot of losers in the financial sector when they got caught up in that oil market bubble that we all saw back in 2008 or 2007, I believe, somewhere around there. And pretty much that's all I have to go over for today. If you guys want to go ahead and check out the charting software that I use, please be sure to go ahead and check out the link above or below this video. It's been pretty accurate. It helps me determine the strength of a trend and the longevity of it as well. So yeah, definitely check out this trading software. I definitely believe you guys will like it. It's very simple to use for beginners. And also, please be sure to subscribe to my YouTube channel. I need subscribers, and it really helps to have a group of people supporting me personally. And also, if you're on Facebook, please tell your friends about me. I'd like to add them and talk with them a bit and answer some of their questions. And you know what? That's all for today, guys. Please be sure to keep on checking out my videos. Take care, folks, and I'll go ahead and see you in the coming weeks and months ahead. Take care.